Hello and welcome to Banking Innovation Summit. My name is Mark Johnston and I'm your host for the next 45 minutes. Now this next session we've got for you is moving to a cashless society. Now I've got an excellent panel of speakers for you, but first of all, just a note to you, our audience. We want to hear your thoughts, we want to hear your opinions, and we want to hear your questions. Pop them in the chat and we'll bring them into the discussion as we can. We've got 45 minutes with these excellent speakers, so do make this time count. Okay, let's introduce our excellent speakers, and we're still waiting for a couple to join, but in the meantime, let's welcome our excellent panelists so far. We've got Sendi Young of Ripple. Welcome, Sendi. 30 seconds on who you are, please, for our audience.
Thank you. Europe MD for Ripple. Ripple is an enterprise software company that uses crypto and blockchain to make cross-border payments more efficient. I've joined Ripple a couple of months ago from MasterCard, where I was in a number of roles growing the data and services business. And I have over 16 years international experience across consulting, financial services, payments in a number of areas, business development, strategy and partnerships and product commercialization.
Great, thank you very much, Sendi, and welcome to the discussion. Next, we've got Isabel Pitt of Banked. Welcome to the discussion, Isabel. 30 seconds on you, please.
Sure, thanks, Mark. Hi, everyone. I'm Isabel Pitt. I'm the VP of Product Delivery at Banked, which is a global payment services network. I was previously at Lloyds Bank working with Google, Form3, and Thought Machine, and I brought live a cloud-based payment rail with the schemes for Lloyds. And prior to that, I was at Combank in Australia, where you can probably hear the accent, setting the technical foundations for what is effectively low-value settlement system and now faster payments in Australia.
Great, thanks very much for that, Isabel, and welcome to the discussion. And finally, by no means least, we've got Lex Sokolin of ConsenSys. Welcome to the discussion, Lex. 30 seconds on you, please.
That's so challenging. Thanks so much for having me. I'm the head economist at ConsenSys, which is a blockchain software company. We play both on the enterprise blockchain side with Quorum and supporting large financial networks that run on Ethereum variants. And then we also provide the largest crypto wallet, MetaMask, that accesses Web3 with about 10 million monthly average users these days. And so I'm engaged in the software development part of that. I think a lot about token economics and kind of the shape of the macroeconomy. And I'm really excited to be here.
Excellent. Thank you very much for that, Lex. A nice, easy warm-up question for you all to start with there. Now, we're still waiting for Frank from Untitled Chapter and Dimitris from deVere eMoney to join us. Hopefully, they'll be joining us very shortly. But let's move on for the discussion because we've got a lot of ground to cover. So, our first question. What are the advantages and disadvantages of going cashless? Sendi, let's come to you first with that question, please.
I think the biggest benefit of going cashless, and honestly, I prefer to use, besides cashless, I prefer to talk about digitizing payments because there's a spectrum. It's not such a sort of black and white cash or no cash. I think the biggest benefit is that it promotes economic growth and inclusion, and it lowers the cost to the overall economy, and it takes out friction from commerce. And essentially, it benefits everyone, people, businesses, governments. We actually tend to see a higher GDP growth in countries with a greater share of digital payments. I think interesting thing is, cash has managed to persist quite well, actually, even, surprises me how well in some places. The reality is for low value payments, right? It is accepted pretty much everywhere, tangible, convenient. But the reality is it has a massive cost to the economy. Governments spend billions to keep cash in circulation and fighting corruption and tax evasion, etc., which has risen due to shadow economy, which lives on cash. Small businesses much more likely to become victims of theft, fraud, etc., when they hold cash. People in many places of the world spend hours and hours just to get to cash points, missing time from productive work. And the reality is those people who have the least pay the most, right? It costs still $7 to send $100 abroad. Total remittance cost, the fees paid globally is still like something in the order of $30 billion. Essentially, the current financial system, which has been built like decades ago, is pretty much centered on cash, and the cost inherent in that system has left 2 billion people behind. I think digitization really is a great opportunity. It lowers barriers, enables those unbanked to have access to the financial system. I think the main disadvantage is if done too fast, too rapidly, but I think that's more of an execution problem. It could leave some people behind, some of the elderly population, for example, or the digitally not savvy population. But through COVID, we've seen that even some of those parts of the segment have started using, and it's I think more of an execution challenge than anything else.
Great, thank you very much for that start, Sendi. Isabel, anything to add to what you heard from Sendi there? What are the advantages and disadvantages of going cashless?
Yeah, look, I mean, I think Sandy, you covered it really eloquently. I think convenience and optionality around how to pay, not being tied to a physical thing, either a card or cash. I'm in agreement with you. I think it's digitization versus a physical constraint. I think to your point around accessibility and financial inclusion, I think there's latest research that's showing there's about 40% of people that that are new to online transactions that wouldn't use the card or don't even have a debit or credit card. So for me, I think there's a real opportunity for us to start delving into what is behind that and creating new propositions to actually bring them along. Because I'm in agreement with you. I think if we go too fast, we are going to exclude people. One last point as well, and I think there needs to be potentially a plan B for us in the mind of the consumer and the average person. I think there's a lot of people who see cash because it is quite tangible, something in your hand, they trust it. My mum keeps £5 notes in her house just in case the machines go down and she can't actually pay for some milk. So I think what is our plan B as an ecosystem in order to create a consumer behavior that feels secure and feels as I guess as invested in and stable with like people feel with cash.
Thanks so much for that, Isabel. And Lex, let's come to you as well on that one, please. What are the advantages and disadvantages of going cashless from your perspective, please?
Sure. I'll warn the listeners that I'm just going to make rhetorical points because what else is the point of telling these stories, right? So in the question, there is some presumption about benefits and disadvantages for whom. For a government to go cashless, like for all of China to go cashless, obviously there's some benefits there. For an individual to transact primarily in a cashless way and shop with their phone, for a business to implement QR codes or things of that nature, so that's kind of one presumption, which undermines the question. The other thing is the idea that there's any sort of choice that any of these actors have about going cashless is also an assumption because they don't. It's almost the point benefits don't matter at the macro scale. Like the reason to go cashless is because the arc of history is going to render everything but that completely irrelevant. And so if you want to participate in the types of economies that people are building, there's literally nothing else you can do but implement modern technology payment rails. And so it is akin to a question of why should somebody make MP3s instead of print CD-ROMs? Why should somebody write blog posts instead of print books and send them into bookstores? And so, this is a rhetorical point, but it is a deep inevitability point that I think the actors at every level of the economy need to understand where things are going.
Excellent. Thank you very much for that, Lex. Hopefully that sparked some debate in the chat as well. Do get your questions in for our excellent panelists. We've got some great time with them, so it's a really good opportunity for you. We've got a question already on the chat, Sendi, that I'll bring to you if I can. Emily has said, Sendi mentioned that moving too fast can leave people behind. What strategies are in place to ensure this doesn't happen? Sendi, could you answer that one at all?
Yeah, I mean, that is obviously a sort of a big sort of policy question as well, right? Every country will address in a very, very different way. I mean, that's a very complex question that I don't think, I am even, qualified to answer, to be honest. I think the key is, again, not so much going 100% overnight, but having, multiple different options available. And I think to kind of Lex's point, I think I actually agree with him that, over time in the sort of macro scale of things, it's not going to be a choice, but until we get there, there will be a lot of choices and a lot of options, and some countries will still, even if you look at, some of the more advanced world, like Germany is still heavily reliant on cash, right? Despite everything that's happening, all the digitization shifts, etc., happening. So I think it's having those options of, cash payouts, banks, wallets, etc., available to different parts of the population, and every country will go at a different pace, right? We're seeing El Salvador, legalizing Bitcoin, and some places again still living with cash, and you have, I don't know, in Africa, sub-Saharan Africa, M-Pesa and the wallets kind of working really well. So there's such a big variety. It's very hard for me to answer that with a simple answer.
Thank you very much for that, Sendi. So moving on then, the next question we've got is, how has COVID-19 impacted the transition to cashless? Isabel, if we come to you first with that one, please.
Yeah, sure. So I think, COVID has definitely accelerated it. Historically, people have been slow to adopt new payment methods, but because of the desire to stay safe, and their perception of safe, and that is from the, disease and transmission and things like that, it has really forced people's adoption. And I think we've seen an incredible increase in that. We're looking at the moment, people looking for different payment methods, really trying to move away from some of the more archaic methods that they're seeing around cash checks, and even cards are kind of in that demographic. New payment adoption is being accelerated because fraud and interception has been proven to be low, which is increasing consumer confidence in it, as well as things like QR codes on the rise here in the UK and in the EU. And we're seeing like that older demographic that historically would have shown some unease about a new payment method. Even without an incentive, their share of checkout has risen to about 30% using digitized over this period. And I don't think it would have happened without COVID as the instigator.
Great, thank you very much for that, Isabel. And Lex, that question to you as well, please.
Sure. So I would guess that about 5 years of progress was made in a year with COVID, in terms of, if you look at penetration rates for whether it's digital payment or mobile payment, or digital investing, Robinhood users, or neobanks, Revolut, Chime users, Square Cash, Cash App users. And so there's been this kind of massive acceleration, both in terms of digital goods and in terms of digital payment methods. And more generally, people just now think that that banknotes are icky and we don't want to touch them, and they're gross, and ATMs are gross in that way too. And I think that's kind of woven into our mass psyche now. Just from I would point to the user bases of mobile apps that deal with payments and with banking as really the core indicator. So MetaMask, which we track the growth of, went from 200,000 monthly average users to 10 to 15 million during COVID. And I would point a reasonable amount of that growth to the fact that people had to really shift into their digital lives a lot more and much, much faster.
Great, thanks very much for that, Lex. And Sendi, your thoughts on that? How has COVID-19 impacted the transition to cashless?
Yeah, I think Isabel and Lex described quite well as kind of the expedition in terms of shift to digital. But I think I can also add to that, at Triple, a big part of our customer base is remittance companies, and in that world as well, there's typically heavy reliance of sort of cash payouts, and we have seen there as well a big move to digital channels. And for me, what's interesting is as the lockdowns have kind of social restrictions are being lifted, we're seeing a lot of these new behaviors, people for the first time, trying these channels, kind of sticking around and continuing that increased demand. I think what's another point I would like to raise is I think the uncertainties and economic challenges that kind of COVID led to, in addition obviously to the health crisis, also led people to more cryptocurrencies as a store of value, as more cheaper cross-border money transfer mechanism for investment. Again, we saw in places like Mexico and Argentina with high currency devaluation, people actually found crypto as a safer place to park their money. And in some places, we've seen kind of reduced trust in governments, which some cases was spurred by how they handled the COVID crisis, translated more into that interest in crypto as a alternative to put their wealth, kind of outside of government direct control.
Great, thank you very much for that, Sendi. Now, I believe we're being joined by Frank, who's having a problem with the camera, but he's on audio. So, Frank, delighted you've been able to join us. Thanks so much for that. A question I have for you is, how has COVID-19 impacted the transition to cashless? Frank, do you have any thoughts on that one at all, please?
Yes, so let me first of all say sorry that you can't see me. So in my role here at Standard Chartered, I'm heading the Fintech segment in continental Europe, but my tech doesn't work. So hopefully that's not a bad sign for my future career at Standard Chartered. But everyone who cannot now see me on video, please find me on LinkedIn. Yeah, so Mark, getting back to your questions. So could you just repeat your question? So the audio is also not so good. I hope you can hear me at least.
Yeah, we've got you loud and clear, Frank. So how has COVID-19 impacted the transition to cashless?
Yeah, so from my point of view, I think COVID has clearly accelerated the transition, as my panelist colleague also just mentioned. So especially at the beginning of the crisis, where there was a lot of uncertainty around COVID, how severe it is, how it is transmitted, and so on. So people were afraid of touching things, especially money, because there was a risk of getting COVID. So this was the situation in Germany. So card payments, especially with the near-field communication system, they were taking off. It's just more hygienic to use those cards instead of using cash. But of course, also digital payments using your mobile wallet. So I used my iPhone a lot during that time. This was a complete game changer, because as we heard earlier, Germany is still an economy of cash. So people like cash, and people don't really want to move to a cashless society. But one other point where I think which is important to mention, cash also become important at some point. So last year, mid-March, when the German government announced the countrywide lockdown, it was something that never happened before. And they said beginning of 22nd of March, we are going into lockdown, and people were afraid. At that point, people were actually getting to the ATMs and getting money because they were not sure what's going to happen. And that's why money also has a function. So cash also has a function, especially in this crisis situation. Of course, it was not as severe as expected, but in this short time frame, maybe a week or two, where no one actually was sure what's going to happen, money was also important.
Great, thank you very much for that, Frank. Now, I think at this point, maybe we'll just welcome Dimitris as well. Dimitris, you've joined us. Can you hear us okay there?
Yes, apologies for the delay. I had some issues connecting.
Okay, fantastic. So let's just bring some of these questions in. We've got some great questions in from the chat. I'm just going to bring them in to our panelists. Lex, one for you to start with. I think leading on from your opening remarks that you made, this is from Dylan, who says, who do you consider will benefit the most from the cashless society? Individual consumers, governments, or businesses?
I think individual consumers and businesses are likely to benefit the most from that setup, in part because the value chain in in commerce and in banking and in finance is massively collapsing, and that means that there is just much more direct connectivity between what a business, or sort of more appropriately what a project or a protocol or an application offers to people, and then what somebody wants to consume or somebody wants to participate. So I think people in a Web3 structure just consume objects that are sold at them through advertising, but are much more participatory. So they might own various incentives or tokens from the businesses that they patronize and so on and so forth. And I think there's going to be much, much closer alignment between what you buy, what you own, where you spend your money, how your values are aligned with what you spend your money on, transparency about, is this a polluting company? Is this a green company? What are the principles of my counterparty and things of that nature? And again, this is kind of abstract, but you'll see the evidence of this in things like direct listings. You'll see the evidence of this in things like crowdfund sales. You'll see the evidence of this in the collapsing fees of investment advice from 150 basis points to 25 basis points, in the collapsing fees of money movement from 3% to 5 basis points, and so on and so forth. So anybody who's making beautiful things and then participating in consuming them is very likely to benefit. And then folks who kind of try to build gates or try to take rents around that activity are likely to have more trouble.
Great, thanks very much for that, Lex. And Dimitris, at this point, let's bring you into the discussion. I've got a question here from Dan, who's an old friend of the show. Dan's question is, how can crypto become a safe and secure payment method without consumers owning their own digital identities? Dimitris, do you have any thoughts on that one at all, please?
Yes, of course. So first of all, we need to have better kind of guidelines from the regulators, right? And we need to have some kind of certainty when we roll out products around the world. It's very fragmented at the moment. You have different jurisdictions having different kind of rules. Maybe it's unified in the EU, and we are kind of spoiled in Europe with having one license for all 27 countries in Europe, but it's not the same thing everywhere else. So this confidence is very much needed in the market, and especially if we need to have some kind of further education to the world, how they can feel more safe about their money and how they spend it, and how crypto can actually help them to achieve this financial freedom that is very much needed, especially in countries with a unstable environment. I mean, look at what happened to Afghanistan, right? And people were fleeing the country. Imagine if you were in this terrible situation. If you have money in the bank, probably you would have a serious problem. Either you lost it, or you had much more bigger problems to deal with, like saving your life. But with crypto, you could just money would be one less thing to worry about, because it will just follow you everywhere you go. So there are these kind of real life situations that are okay, not very pleasant to talk about, but we see them every day or every year happening around the world, and crypto can really help people in their everyday life in these extreme situations as well.
Great, thank you very much for that, Dimitris. And another question, let's take this to Sendi, I think. It's a question from Sahil, who's put is, what is being done to ensure trust and adoption around digital currencies? And with increasing digital currencies being introduced to market, what makes a digital currency better over another? And how do you foresee this will be streamlined globally moving forwards?
Wow, quite a lot to unpack there. So I think one area of regulation, right, which Dimitris touched on very, very nicely, I think, to make sure that we have clear guidelines, people trust, and safe and sound, etc. I mean, I think I cannot overemphasize, I guess, the importance of having clear rules of the road, clear rules and regulations. And again, I think we are in a much better place generally in the UK and Europe around, FCA has clear taxonomy around how digital assets are, classified based on their use cases. We have the MiCA regulation in Europe, which is going to, kind of attempt to harmonize. And other parts of the world, like US, there's a lot of uncertainty, a lot of fragmentation, and lack of clarity on how this space is going to be governed. So I think without clear sets of rules of the road, it's very hard to allow innovation to spur and continue and grow. In terms of which, I think there was something around which digital currencies are better, etc. I mean, so I don't think there is one answer to that. We do use XRP as a bridge to move money around the world, but I'm not going to claim that XRP is the best digital currency in the world for everything and anything. It really depends on the use case, right? Bitcoin has a place for certain things, XRP has a place for certain things, and the other thousands of currencies out there have different use cases. The central bank digital currencies, today 80% of central banks are exploring or about to launch their own central bank digital currencies. What I think is interesting is not so much like which one is better, it's more this future that I can see, which I think will be more of a multi-currency kind of world, where everybody will use it in different currencies for different needs, including fiat. And interoperability, I think, will be the key thing in that world.
Great, thank you very much for that, Sendi. Hopefully that answers a few of those questions on the chat. Do keep them coming in, and we'll bring them into the discussion. And the next question I've got for the panelists is, what role should cryptocurrencies play in a cashless world? Frank, if I come to you with that question first, please.
Yeah, so my personal opinion is, first of all, that cryptocurrencies are here to stay. So no matter if we are in a world of cash or if we are in a cashless world. But we also have to distinguish between the various types of cryptocurrencies, as we just said. So there are different types of cryptocurrencies with different use cases. But if I look into Bitcoin, so the most famous one. So I believe in the Western world, Bitcoin will not become a cash substitute like in countries like El Salvador, for example, that introduced Bitcoin as a legal tender. So I think that Bitcoin is just too volatile. I mean, if you look back into April, Bitcoin was at 65K and then getting down to 30K and then getting back up to over 60K now. Just imagine I would have bought a car now from Elon Musk, who offered at the beginning that I could also buy a Tesla with Bitcoins. That's not the case anymore, but he offered that at the beginning. And then I would say, okay, I take one for one Bitcoin, and then the price was $30,000, and then now I would have to pay $65,000. I cannot see this use case that I use that for real payments. So for me, Bitcoin is like more gold 2.0, 3.0, however you want to call it. So it's more a storage of money in digital form, and I can't see why I should sell my Bitcoins to buy any goods. So for me, it doesn't make any sense if I'm not forced to. But there are, of course, other cryptocurrencies issued by the private sector also on the horizon of coming up. I mean, if you look into examples like Facebook, for example, they want to come up with an own cryptocurrency amongst their users. But nevertheless, the people using cryptocurrencies at the moment is still very, very small. So it's definitely not mainstream yet. But where will be a use case, and this is what we also just heard, is in the CBDC world, when the central banks come up with an own. But I think it's not a cryptocurrency. It's more like the digital version of the fiat currency. But this could be something where I could see a use case, but it's not crypto.
Great, thank you very much for that, Frank. And Lex, your thought on that, please. What role should cryptocurrencies play in a cashless world?
The question. I mean, all the roles. I think the digital dollar already exists. There's somewhere around 150 billion of it. It is a cryptocurrency. I think, I'll pick a fight a little bit just for fun, but I think talking about Bitcoin as a cryptocurrency and therefore as a inappropriate instrument for payments, I think is a little bit sideways. Bitcoin's great. I think it has the use that was articulated around storing value and being scarce and all of that as an investment asset. There's plenty of cryptocurrencies that are pegged to the dollar that are being used by millions of people, every single month. I think it's in the geopolitical interest of the West in order to defend stablecoins, i.e., USD pegged or euro pegged or pound pegged cash equivalents. And I think we've got a really good proxy or comparison with money market funds. There is $4 trillion worth of money market funds. The Federal Reserve is not complaining about money market funds. And similarly, I don't think that central banks should be complaining about stablecoins because they are really just a cash equivalent that people use in a capital market system. And so, you know, my sense again would be that the crypto-based infrastructure is going to underpin lots of financial instruments. And already for about 2.5 years, we actually have the evidence of this working and being adopted. Like we don't need to invent it forward. It's already here.
Great, thanks very much for that, Lex. And Sendi, your thoughts on that one as well. What role should cryptocurrencies play in a cashless world?
Yeah, I would also go with sort of any and all, right? I mean, there's countless number of roles, but for me, what really excites me is that crypto and blockchain technologies essentially allow us to create more sort of digitally native experiences and ways of transacting that are way better suited the way we live our lives, right? It's so much more on demand, so much more global than it's ever been. And I think the legacy sort of financial system, payment system, infrastructure that's been created like 50 years or so ago is just not fit for it, right? We've created layers and layers, we've tweak things around, but it's just really not fit for how we live today. And the testament to that is, again, despite all of the innovation, there's been a lot of front-end innovation. For example, even if I just pick sort of the cross-border payments, again, kind of remittance, specifically remittance space, a lot of sleek apps and easy, great interfaces. Having said that, the backend has really, really lagged behind. And, we see that today, 6% of all payments sent get stuck, right? There's $10 trillion just stuck in pre-funded accounts around the world, like doing nothing, sitting idle, because that's just the the financial system is built. That's the only way you can sort of make payments across the world in a sort of consistent manner. For me, what's interesting is using, for example, in our on liquidity solution, using XRP as a way to optimize all of that, free up the liquidity, free up the working capital, and create a whole new experience and greater benefits around cost transparency, efficiency, inclusion, etc. So it's not so much about like, is it crypto is better to use to, I don't know, buy milk. I mean, honestly, that's, maybe down the line. Is it today? Probably not. Is it going to be the same every part of the world? No, probably, again, not in the UK, US, but in Salvador, yes, it's, it's working. So there's a huge variation depending on where the countries themselves are on their digitization and crypto journey, essentially. But yeah, for me, what's really cool is I think the blockchain technology and crypto sort of finally give us a chance to address the infrastructure layer truly without having to have, hundreds of countries and hundreds of governments collaborate, and, which would probably take decades, and, I probably wouldn't be here.
Great, thank you very much for that, Sendi. If you do have a question, we're down to the last few minutes of the panel, so do pop them in the chat and we'll try and bring them into the discussion as we can. My next question is a largely cashless society genuinely within reach or still a long way off? Isabel, if we come to you first on that one, please.
Yeah, so I think if we look at some of the Nordic countries in Japan, they've had really government-backed initiatives which have needed to remove cash, and they've been pretty successful. So I think it is within reach, but it needs to come with that support network from the banks, the government, to enable accessibility for both businesses and consumers to truly reach the edge cases. When you talk about the consumer, we need to get better at KYC to make it easier to enable people to get an account, to digitize their money. And then we need to be able to support the people to to access their money and, truly digitize what they have. Do we need to provide devices to those people? How do we do this and how do we support them? Because I think it'll be the edge cases that really slow us down. I would also say we need to support businesses, because I think, not all businesses are built the same. So you're going to have smaller businesses where the owners may not be comfortable or confident, and can they manage their reconciliation digitally? Have they evolved to that? So for me, it's about, yes, it can be, it's been proven in certain markets, but I think there's definitely a support network that needs to be put into the mix that enables, those more, those slower to digitize areas of our population to actually get to that point with the rest of us.
Great, thanks very much for that, Isabel. And Dimitris, your thoughts on that one? Is a largely cashless society genuinely within reach, or still a long way off?
I think we are already seeing it. I mean, you travel to some countries and it's already there. People don't accept cash anymore. And of course, COVID has accelerated this trend. I'm sure you have discussed about this topic before I joined. So it's already here, and it's already providing different kind of options. So it's not just cards. It could be wallets. It could be crypto. It could be anything. So for me, it's all about providing different kind of options to citizens around the world, and give them the freedom to use their funds in a way that makes much more sense to them. And in a way, you can connect the world in a much faster way. Digital is here and it's not going anywhere. I think we will all see this in our lifetime for sure.
Great, thank you very much for that, Dimitris. I think we've got a couple more questions actually. Frank, let's bring you back in. I think you work for obviously a very large banking institution that's predominantly active in Asian markets. Can you also share some experiences from Asia for a cashless society at all, please?
Yeah, sure. So I didn't introduce me properly at the beginning. So I work for Standard Chartered, and Standard Chartered is a UK bank, but predominantly operating in Asia, Africa, and the Middle East, and China and Hong Kong are by far our largest market. So we have roughly 90,000 people globally, and most of them are actually based in Asia. So let me comment on China, because China, from my perspective, it's ahead of us being a cashless society. And I'm not talking about being a German. So China is ahead of us being a cashless society. I studied there back in 2006. And when I was there in 2006, it was a pure cash economy. So the credit card infrastructure, as we know it here, so it wasn't present in China. But then the first smartphones were introduced. Apple came up with an iPhone, and then the Chinese tech companies also had similar smartphones on the market. So this was then the beginning of the revolution in China. And two payment providers emerged, Alipay, WeChat Pay. Probably most of you have heard about that. And they were offering a service then to make payments just with your mobile phone. So they skipped the credit card payments and moved directly then to the mobile phone business. And clearly, COVID has accelerated the process further. I think 80% of all transactions in China are already done cashless, so done with your mobile phone. And also, I've been there. If you've seen that ever how it works, it's very simple. You just have a QR code system, and you can pay with everything. Yeah? So I can pay with my with Alipay or WeChat Pay. I can pay my rent, my phone bill, my food, my gym, everything. So that's it. There is not something similar in Germany. So these are real digital payments. I use Apple Pay, but Apple Pay is more like a digital wallet of my bank's credit or debit card. So Alipay and WeChat Pay, these are real digital payments. And I also think that on the CBDC side, so China is the front runner in that field. So the e-yuan or e-renminbi. So this will compete against an Alipay and WeChat Pay. For sure, China, as you may know, has launched a project already since several years, and the plan is then, so they are in testing phase already, and the plan is then also when there are the Olympic Games next year, the Winter Olympic Games, that they will allow foreign users, so just like myself, if I would go to the country, to get access to the wallet as well, and then to buy this digital yuan and then make payments with that. So this is very exciting, and I think that a lot of people and all the central banks globally, we've heard that 80% of the central banks are looking into that. But also all the banks will keep a very close eye on China and observe how they experience their CBDC journey.
Great, thank you very much for that, Frank. And I just wanted to get back as well to the question around COVID as well, and to you, Isabel, I think, around alternative payment methods, QR or pay by bank. Did you have any research or any thoughts on those at all, please?
Yeah, I mean, we're seeing a huge increase in, the consumer adoption of these alternative payment methods. I mentioned it when we were talking about, the changes that we've seen during COVID. I think, there's a big influx and, move towards at an industry level to, really solidify the relationship and the trust with the consumer, which these do enable because they have been proven to be secure, and they've been proven to have lower interceptions of fraud. I mean, you see, we've seen a reduction in consumer behaviors around actually using their debit card or credit card is part of the checkout journey and saving those details because they inherently think there's going to be some fraud associated with it. So we're now seeing a real influx around, as I've said before, that balance between security and convenience. And that, is definitely fluxing at the moment based on, what we're seeing with COVID. That's definitely, as I said, adoption's increased. We all know that. But we're seeing different behaviors start to emerge in that research.
Great, thank you very much for that, Isabel. So just finally now, we've got like a couple of minutes left. If I could just go around each of our panelists for the next 30 seconds each and just ask, what does the future look like in this space? Let's start with you, Dimitris. What do you think? Your forecast, crystal ball out. What does the future look like here?
The future is the metaverse. If you think about it, and there is a lot of talk about it. But think about doing all these digital transactions in a completely different setup, right? It's not cards, it's not wallets, it's not crypto, it's something completely different. And if we want to, provide some kind of vision for the next, 10 years or so, I would place my bet over there. And you have all these big companies now, like even Facebook is considering changing their name to reflect this big, bet to the metaverse. I think the companies that will nail down the payments in this new environment, some people call it Internet 3.0. I think there's lots of traction to be made there.
Thank you very much, Dimitris. Frank, that same question to you. Global crystal ball out. What do you think?
Crystal ball out. So I think, as I said, cryptocurrencies are here to stay. Bitcoin will become an asset class. I think what's important is that we have a regulation, because I think with a regulation it will even be more adopted. We need someone who is safekeeping the Bitcoins as well. So I think that the price will accelerate further to above 100K. CBDCs, this will be a big success, but also a challenge for banks going forward, because banks might have issues on the funding side, because if people then put money into central bank accounts and away from banks, this might become challenging for banks, but it also creates new opportunities. Getting cashless, I think it's not my generation, at least not in Germany. It's the generation of my son. So I believe that my son is 10 years old, so he might become cashless at some point in time, completely.
Thank you very much for that, Frank. Isabel, your thoughts?
I think it's hugely exciting. I think technology is enabling propositions that are going to benefit consumers and businesses across the globe. I think I'm in agreement with Frank. I don't think it's my generation. I definitely think it's future generations. But I think unless we have another incident similar to COVID, where we've got a long period of time. And that adoption curve is able to be accelerated. I think the one thing that we haven't really spoken about is consumer education, and that awareness and understanding of what it means to be digitized. And I think there's a huge opportunity for us as payment ecosystem to really bring the consumers and people along the journey who might not be as digitized savvy as certain parts of the population. But I think it's an exciting time and it's a great space to be in.
Great, thank you very much for that, Isabel. Lex, your thoughts, crystal ball?
Got nothing but crystal balls. I think the next 5 years, much of this conversation is still going to focus on a framing of a new payment rail and being able to use blockchain infrastructure for payment rails. And I think that's the lens that we're going to be restricted to for a while, of here's this asset class and institutions are moving in and so on. I think on a longer time horizon, 10, 15 years, you're going to see a restructuring of the internet into Web3, and that restructuring will reformat work, it'll reformat value, and it will, I think, obliterate the distinction that we have today between different asset classes as well as different media. So the difference between sending an email and launching a token, for example, will dissipate. The financialization that we are, I think, trying to regulate and are so scared of is going to permeate everyday life in a way that really is hard for people to understand today, but will end up being the glue on which the global economy runs.
Thank you very much for that, Lex. And Sendi, finally to you, your thoughts, crystal ball.
I'm excited about the possibilities to essentially, address some of these fundamental gaps that exist in our current financial system. I think we've reached a tipping point for how we can democratize access, leveraging crypto and blockchain technologies. I think, adoption of this technology today is the fastest we've ever seen with any technology, and that is the reality. Look at the history 10 years ago. It's a massive speed. So I think it is within our generation that we will see a multi-currency world. Is it going to be as seamless as as I would love to see it? Probably not, but I think we will get there eventually. I think the really interesting, cool stuff is, I think, seeing this multi-currency world where we can leverage different versions of cryptocurrencies, etc., for that is best used for whatever we're trying to do.
Great, thank you very much, Sendi. And that's all we've got time for now at Banking Innovation Summit. My thanks to all of our panelists, to Sendi, to Lex, to Frank, to Isabel and Dimitris. Thank you so much, guys. Thank you so much for that. Thank you to you, our audience at home, for tuning in and joining us. Thank you so much for that. We're back again tomorrow at 10 o'clock BST for Fast Track to the Future of Banking, staying ahead of the competition. I hope you can join us there. Follow us on social media, LinkedIn and Twitter, to get all the highlights from today's discussions. Thank you so much, and we'll see you again soon. Thank you.